Hello guys, glad to have you on board again today. Not that big of a news regarding a cryptocurrency sector. We basically have nothing to talk about today. We haven't moved since yesterday's signals and yesterday's scenarios, so I'm gonna spare and save us some time today by not making a rewind of what we said yesterday. So basically waiting at that point to have some kind of potentially usable signals either in Bitcoin or Ethereum, as none of those two are triggering anything close to a signal. We still have nothing like a bullish momentum validation from sine wave or any candlestick pattern. The market is just trying to find bulls and we don't, meaning that we're probably going to have to go lower. The taking profit signal we showed yesterday isn't showing some sign of interest from the market. We're just building some kind of triangle, suggesting that we might eventually make lower prices in the next few hours or days. Suggesting that bearish reactivation should lead us to an exit pattern probably. So you can at the current time, the most probable scenario to me is either we get out of this bearish trend channel, and this will sign up the end and the validation of that taking profit pattern, as the opposite signal is just we push one more time, probably going to have to try breaking it down. So you just can consider this as a trend channel. You just take bears to bear to bull, you take that trend channel. Generally when you have that, the market will try to break it down, which means if we go down, probably going to have to go there. Even trying to go lower, probably $150 and $40. It will be really short-term movement. We just go there, triggering stop losses, don't find any bearish move, and we're gonna rapidly, I think, restore prices to the bull side, which means we'll finally have that damn V bottom structure. As long as you don't have that on your chart, you cannot speculate to a possible bottom found out. So when the bulls will be in, probably going to look like a V bottom structure, not something we had like that. This is the reason why I took partial profits back then, because this wasn't sounding and looking like a V bottom structure. That double bottom wasn't good. I really want to see something like that. Stop triggering, lots of volume, bulls at play, and whenever I'll have that and market rapidly retracing back to the previous resistance, I'll be forecasting a potentially bottoming structure and be ready to put some money into the Ethereum and eventually get to buy some Bitcoins as well. But I think for now, way too dangerous to get into buying right now. I'm already buying, so I don't need to put more efforts out there just putting more money. I'm basically waiting right now. I've got a squeezing momentum, so all you can do is just, if you're speculating, you're out of context. You cannot speculate out of a squeezing momentum. You just want to be waiting and preparing for some volatility. It could be a bullish volatility, and just to set things really straight, we could really well have a bullish reactivation. That wouldn't be a good sign, because once again, I really would like to see a V bottom structure instead of that kind of a double bottom as well. It wouldn't necessarily be great. The only solution is that if we do this, I want to see a brutal invalidation and getting back to the big resistance, not just those ones. I don't want to see the market just going there and then failing again. I want to see the market getting there, breaking it up, and instantly getting back to that area. If we were about to do this, then I'll be happy to say that we found out the bottom. Right now, I still have pretty damn confusing signals, which means I have not that big of a conviction. So waiting for further information is generally the answer you'll have coming from the indicators, and basically that's what I have in here. So instead of bullshitting out there, I'd just rather like to tell you what I can read. And this just says wait is the only solution out there. Moving out from the cryptocurrency sector to the other asset classes, basically not that big of a day yesterday, not an interesting day. We're going to talk about the EURJPY. It's basically the only scenario that has been moving since yesterday. We're going to talk about US oil as well, as we have further informations. The gold is still dying. Stock indexes are just basically dying as well, just waiting for further information. I'm reminding you that Thursday is going to be the big day, which still leads us with today and tomorrow to have some potential anticipated trading entries. So I'm watching closely for potentially early signals of positioning ahead of those catalysts, but despite having those, we'll just have to wait for Thursday. Just like I done with the cryptocurrencies, I'm basically waiting to have further information. Regarding the US oil, I think we made the A wave, first bullish impulse. We made the B wave, and we'll still have probably a C wave to make. So I forecast that wave to just go up there, okay? So for now, this is what I can see. At least we'll go there. We've got the 127 extension approximately here, basically showing out high probability to see the 50% retracement at play out there. Eventually 61, so I'd say 50% to 61% will be the selling area to forecast prices potential reversal. So get to trade out there instead of higher pricings. So I would say here is an interesting selling area. So waiting for a signal out there is the only solution to me, because for now all we have is a double bullish. So to fight back from a double bullish signal, you might want to see the bears at play. Sorry, we don't have double bullish, it's just got sine wave bullish. So I'd like to see a double bearish just to confirm that early bearish signal. So we got bearish sine wave and confirmed, bullish sine wave and confirmed, so kind of neutral in here. We want to sell high prices and try to get a double signal line here to have some decent odds and risk management to get into that trading scenario. So waiting into the entire indices sector, it's way too dangerous to get out there and try and speculate. Investors will try to be at play and kind of hiding the positions they will make ahead of Thursday, and that's all we have. It's still playing the same quarter. We've got the yields, 10-year yields. We've got the gold and silver couple, and we also have, let's say, we've got the 10-year yields and short-term repo market, still having the junk bonds lost in between. So we've got the couple, junk bonds and VIX, both saying contradictory signals. We've got the junk bonds showing some weaknesses out there, where the VIX is showing some strength. VIX cannot manage to break up resistances, but the junk bonds should be doing it, and they're not. So we've got contradiction between VIX and junk bonds. We've got we've got contradiction regarding the repo market that is surging, where the 10-year yields are basically not moving. So it's not showing the same signals. Everything is just a mess out there. It's clearly because of Wall Street once and for all. It remains the same magic at play. Wall Street doesn't want to surrender, doesn't want to give away the gains, and they're trying to hold as most as they can, creating heavy distortions all along the asset classes, coming from the forex to the bond market. So it's basically a mess everywhere, just trying to figure out what the hell is at play on the US economy. Is it really an overheating signal that the economy is going too far, that the market is going too far and the economy will not follow? This was just short-term speculation on the economy just because of the tax plans and things like that, that there's just been overheating the economy that was pretty damn already nearing the end of an economic cycle. Basically, we just gained an additional 1 to 2 years because of the Trump election, the tax plan, and things like that. But basically, the end is still there. We'll still have to breathe out to breathe in again in a new cycle. And if that's what's about to come, then obviously we'll have a lot cheaper prices to buy equities and things like that. And the money will basically have to get out and get to safer areas in between, probably going to be gold, bond market, and things that pretty usual, because every time people say it's going to be different because of this, because now we got QE, because now we've got, fuck it. I mean, every time I hear that, the market's just doing the exact same thing as usual. So we're nearly 8 years of growth. Everybody think we're going to make an additional 2 to 3 years for no reason. we're generally, I mean, every time we're having this, every time we have the same bullshit out there, the market will keep on rising forever, even though we already have bubbles and things like that. I mean, we have everything. We've got the explosive cocktail that should lead us into a recession, but the market doesn't want to see it that way. But I mean, fuck it. At some point, the market is not the one who decides. It's just how it goes. We still have to follow economy. We can diverge from the economy for a long period of time. This is generally what we're doing at the end of economic cycle, and this is what we're doing. I mean, we're having distortions for almost a year right now, where the economy is showing some slowing paces, where the market is accelerating, and that's not normal, because it's just happening with the US. It's not happening elsewhere. I mean, all the other markets have been pulled back in. Even the Chinese have been pulled back in 25%, so it's nearly a recession trade out there, where the Wall Street have even less, and even lost 5%. So abnormal pricing is absolutely abnormal, cannot last for too long, but you don't want to be putting all your money in that trading scenario. So once again, remain speculative as long as you haven't been proven right, meaning that once you haven't been proven right, you can still be proven wrong, and being proven wrong just must remain a tiny loss. You must be aware of this. Still having high stakes and high probabilities to be wrong, but once again, you're not wrong until you haven't been proven being wrong. So you might want to try this anyway. So any short signals I have, I'll take them, even if they are proven wrong multiple times in a row. I don't have fear being wrong. Those who are not traders, okay? This is pure and simply this. I've been saying that so many times. I really hope that you got at that point. It really is that way. The market can be right, can be wrong, can be rational, irrational. You don't give a shit about that. If you think about that, you're just going to be paralyzed and never ever going to be able to trade. So you need to have confidence, and being wrong is part of the game. All you care about is that wrong is not costing you more than what you have when you get right. And all you care about is being right, all right? You forecast yourself and you project yourself into being right until you're wrong, and when you're wrong, you take the loss, and you don't hesitate to repeat the same operation if things happen to be the same tomorrow. You can be right 2-3 times in a row. All we care about is that have positive outcome in the long run to have a statistical advantage. So basically still waiting for Wall Street's, we have to say, I said we have to talk about EURJPY. So we're reaching out to the resistance area we've been highlighting yesterday. So instead of going to breaking the support, the market is choosing to get to the resistance. I think that we're going to try chasing some stop losses, because if we went out there, it's necessarily, I don't think this is just to go there. I think we're probably going to have to fuck up some bears in here and try to get some stop losses for those who've been putting them too close. So accordingly to the plan, as the invalidation level has been triggered today, I decided to reduce the number, and I got to 3 on 5, so meaning right now I had to get out of leverage trading, so I got back to leverage 2. I remind you that was leverage 3 on that asset. So I took a partial tiny loss, basically reducing the leverage to have some opportunities to widen the stop losses, to broaden the stop losses. So I've been putting them further away to make sure I'm not going to be taken down stupidly by a market that could very well go there, or even slightly higher. So I don't necessarily think that we're going to go that high, but I think we can go there and eventually even try to chase some stop loss right above that market top. I don't see any reasons to go higher than that. So for now, I see that we can go just there, trying to find some bears, and we'll see how it goes. So I forecast the market to just try making open shadow candles in here. That's what I would like to see. The market getting in the air, triggering stop losses, but not finding any bulls, and then I'm going to get into shorting again. It's just I'm temporarily going out because the latest double signal has been pushing us very fastly below those resistances, showing some bullish momentum, and I don't want to fight that. It's just basically I'm going to let that momentum exhausting itself, and whenever it will, I'll be ready to jump back into the next bearish impulse, because I think it's going to be as volatile as this one. I think just the market doesn't really know where to go regarding the EURJPY, which is basically waiting to figure out what the euro is at play, what the euro is doing. But as I said, to me, euro dollar is basically going to be a range for for a little while, and the problem is that the yen index isn't still figuring out its way up, which means we're basically dying in here just like the euro dollar, but at some point the yen is and should find some bullish outcome. I'm just patiently waiting to see this happening. We got to talk about Tesla as well. So Tesla is showing some signs of strength. In a daily chart time frame, we've got a double bullish. We got a simple bullish. So bullish cycle trigger right at the bottom of the possible range means that I might have been a little bit too much optimistic regarding that big range. I still forecast us to go just slightly lower, so I remain in that trade. But I'll be probably risking to narrow the gains I have because if the market keeps on pushing higher, we basically made an ABC inside a range and the market could just recover and get returned to the mean. But for now, I remain bearish. I still think that we have some decent odds to go reach out to the blue areas. We've been breaking that resistance. I think we're gonna have probabilities to break down that support as well. I mean, just to go stupidly and rapidly out there, we got a breakout area in here, and I think we're going to go there just to find some liquidity. And I think this is where the buyers might be waiting, not necessarily be buying this. I think this is just sellers who've been taking profits, but I think buyers are waiting for better prices. So I'm taking the risk to eventually lose part of my gain, but I want to have better prices in order to get out of this. So I'm basically waiting. We have to talk about Apple as well. So we got a keynote on Wednesday. It's going to be a big game changer as Trump is taking care of it already to fuck up the bullish momentum. It's been 5 days in a row, 5 bearish days in a row. It's not normal when you have an asset trending into a bubble market, which means generally pullbacks are rapidly bought out when you are into a bubble, which means we've been fading onto a technical level highlighted by sine wave. You don't really want to see that market fading out there, otherwise it means a range after a bubble trading means that we're going to fuck up the bulls once and for all, and going to break all the stop losses at once, and this is where we'll go. So basically losing 40% is a probability out there. So it's still pretty damn early to say, and moreover it's impossible to trade because we have the keynote in tomorrow. So I basically recommend to wait for that keynote to occur, and if for some reasons the market were to be disappointed by that keynote, adding this to Trump bullshit could be the too much thing for Apple that we're basically going to have to suffer some subsequent taking profits structures, and if bulls are getting out of this, just once again, this is a bubble, which means everybody think it's going to go up forever. You know the drill. So this is how it goes. Whenever the momentum fails on those assets, they generally return brutally and goes from bullish to bearish, and then we make the dead cat bounce and we go to crash the market. Okay, so if you don't want to be speculating on the crash, you're just going to wait for the pullback in here in the dead cat bounce pattern. I basically decided to go short just because I want to be part of this, but you need to be aware that the market isn't going to fall in a straight line. It will in here if we're going to trigger a crash, but we're just going to take down the stop losses and brutally reverse. So if you trade bearish, you don't want to last long. This will just last a couple days, I think, in those areas. That's basically it. So patiently waiting to see how it goes. Regarding okay, so USD MXN is reversing bearish. That's great. We made a bit daily bearish engulfing, and this is something I like. So we'll see if we manage to get to this price where we'll have to go. So I would say 2 to 5 right now. Sorry, we're gonna have to go and break down that low to make sure it is, but we made a double bearish, so this is new since yesterday. I'll say 2 to 5. So we're rising interest in that asset, and I'm ready to forecast if we can just break down that low. So we've got double bearish versus double bullish. I'll see who's gonna win that game in the next following hours and days. So if I sum up things, basically having a close look at the EURJPY and trying to find a double bearish signal, but eventually forecasting that market to go slightly higher, taking some stop losses. So I've been narrowing. I've been reducing my exposition on that market just to be able to put the stop loss further away and not be taken down by that market, because I feel like the market is about to take down and hunt some stop losses, and I don't want to be part of those who are going to be hunted down. So I'm basically waiting and taking some money off the table to have more options into trading that market. That's it. So waiting today to find some potential early signs of interest into the equity markets, coming from today to tomorrow, tomorrow ends of the day. I'll try to search for double bearish signals in the US equities and probably into the NASDAQ, and we'll see about this, but for now still has to remain at a very low level of confidence. I would say in here we're not even 1 to 5. It's just basically waiting to have informations to get into that market. But we clearly made a bearish breakdown, which is not a good sign for the bulls. Okay, but this is not yet a won battle for the bears, as just have a look at this. Back then we've done the exact same thing and the outcome were just damn fucking bullish. So if for some reasons Apple were to invalidate the latest weaknesses and were to recover pretty early and brutally, you know how it's going to be regarding the NASDAQ. The NASDAQ is going to surge mostly because of Apple, Amazon and big market caps. So don't take that as a win. It's just we won a battle. It's still pretty damn too early to consider winning the battle. Okay, so I'm going to take your questions right now. So, damn hackers, yes, fuck them. I don't really know what the fuck is it. I mean, we've all lost time out there. Those who've been building those algorithms to fuck up the guys like me just lost a fucking crazy amount of time to build those algorithms, and I myself have been losing 3 to 4 days trying to figure out what the hell, what's at play, changing all my passwords, trying to recover what I could, trying to change things. I mean, and it's not yet over. I mean, it's just getting started at that point. So I'm still gonna lose a lot of time just because of a tiny fucking algorithm. They're just gonna be messed around. So it is never revealed when you're on holidays or any personal info. Sadly, there are many who will take advantage of this for their gain and your loss. Yes, but obviously that's not a problem, okay? It's not going to kill me, and I'm just... I mean, I would have preferred not to have to face this, but it's not going to kill me, so I don't really give a shit. I'm just doing what I have to do. It's not the best timing, but that's how it is. I mean, life isn't always pleasant, and these days are not the most pleasant ones, but they're not necessarily very unpleasant ones either. Video is blurry. It's because you might have been hitting the play button right after the upload, but normally if you just wait for a minute, you won't be able to have the 1080 pixel resolution, which is far from being blurry. So what do you think about Ethereum current and 2018 inflation being around 10.7%? That was factored into your buying targets. Would it stay as a hurdle, or I would think there are different buying targets depending on the inflation rates. That's an interesting kind of seeing that, interesting way of seeing it. But I think inflation is what you take care of when you're trending, which we're not right now. I think we're long-term trending, we're long-term bounding, and this is not necessarily a point where inflation, even inflation targets, should be taken into consideration. So I would basically say that right now it's just really a hodl kind of scenario. Either you follow it or not follow it. I really don't give a shit. You do at your own risk. I'm just telling you what I do, and I think right now is nothing that you should be concerned about regarding the inflation. Inflation is something you might want to be concerned if heavy inflation were to come in cryptocurrencies in the next following month, but after installing a potential restoring signs of a bullish trend. But so for now, I'd say interesting way to put it, but not necessarily going to be interesting right now. It's going to be the case if, but first we've got to validate that if we manage to find a bottom, we'll have to take care of potential inflation on potential inflation. So no, I clearly don't think so. I think these are just correlations you put at play where they shouldn't, and I thought I'd be clear on this earlier already. The thing is that right now, as I said, we're short-term traders versus long-term traders. It's going to create some heavy distortions, and it's not necessarily going to be the case. I know it's hard for you to see this clearly, but as we are facing long-term investors versus short-term speculators, creates distortion in the price structure, because in terms of volume, long-term traders will have a lot more volume to execute, a lot more volume demand than the short-term sellers might be able to provide. So we'll have, in those contexts, to put at play what we call a market-making strategy, which means long-term buyers are going to do anything they can to make you think the market is bearish, so you sell at very low prices with leverage and they're going to buy you out. So it's a technique that has to be done because low volumes has to be taken care of filling very high volume demand. And whenever you have this, you must be aware that the market is going to be trappy. It's going to be what you see is not what's about to happen generally on those markets. So no matter how hard you try to figure this out and anticipate this, it will generally just play against you. So this is the only reason why you don't want to be part of the speculators, but want to be part of those who are playing in the long run. The only problem that could be in here is the fact that there might be no long-term buyers. And if that's the case, then I'll just have bought something that will be just dead right in the egg. So if that's what's about to come, then I'm ready to face that risk. This is why I've been making the hodl. If for some reasons hodl is not the case in here, and if I'm the only one doing the hodl out there and not supported by other bullish demand volume support, then I'll just be wrong and I've bought something that will just be dead in a few months and I'll just have lost my investment out there. But that's part of the game. If you expect to have gains, it's because you've been taking some risks. And if the risk shows up, that's how the game plays. You don't win 100% times. And I'll just accept the loss and move on to something else with no regrets. So I hope you got my points out there. It's just, once again, if you're thinking binary choices like true to false, right or wrong, gains or losses, if you fear the losses, how can you expect gains? If you want to be true, how can you fear being false? If you want to be right, how can you fear being wrong? It's just going to pairs, and it will always be balanced, and you have to embrace balance. All we care about is not being balanced, is being imbalanced and having a tiny long run statistical advantage that just provides you with slightly better odds to be slightly more right than you can be wrong, to make slightly more gains than you'll make losses, and this is all we fucking care about. So anyway, that being reminded to you once again, I'm going to leave you guys on that and see you tomorrow.